Ladies, thank you for joining me today to talk about this one. I was fixated by this story because the commentary around that time, I think you all remember, was around how South Africa was doomed and how South Africa's currency was going to go to the dogs and how South Africa essentially was going to be bankrupted to an extent if you listen to some people. So I wanted us to look back and ask the question. Number one, first, are we paying junk prices today on our bonds, on the equities that are trading in South Africa? And also, are we seeing a rating of junk status on our currency? Annabel, I'm beginning with you.
With the rand at 14 rand to the dollar. And after the budget in February, but also after the Moody's downgrade you mentioned and the other rating agencies' actions, the rand actually went above 16. And of course, that was before the COVID-19 crisis. And the crisis hit, we know it went to 1950, and then it backtracked substantially. And of course, now running around 1650. So yes, I think we are paying some of the price for losing our investment grade credit rating. Perhaps just a bit of caution around the word junk. If you're going to be incredibly technical, you'd say a sub-investment grade rating at a double B plus, for example, where Moody's is not actually junk. Junk, perhaps on a more technical basis, is probably seen in the C grade categories, but it doesn't really answer your question. Your question is, are we paying the price? And of course, we are paying the price. We're seeing bond yields significantly elevated from where they were in the 2000s when they were closer to 6% for the 10-year bond. We know that. Obviously now closer to 10%. But also, of course, since the rating downgrade, yes, we've had the dislocation in the markets from the crisis, the global financial market crisis. And of course, we've had the SARB intervention. But since then, the SARB has had to pull back a bit. It can't buy bonds forever. And of course, as a consequence of that, we have seen yields tick up. And I'd really point you, Godfrey, to the fact that there's a much bigger difference between our 3-month JARBA and our 10-year bond, for example, or between the 5-year bond and the 10-year bond. And that's really, really important because, it shows the spreads are widening. Of course, our yield curve is steepening so much, but mostly, Godfrey, foreigners are selling out of South African bonds very heavily. And it's mainly the domestic who are buying. And of course, they're benefiting from the carry trade. The carry trade with our repo rate so very low, 350. Of course, our bond yields at 10%. There's that massive benefit to be gained, and of course domestically that's hugely incentivizing. So that's a real problem for South Africa. In a way, almost we're being propped up by artificial means, the big yield being offered, as opposed to actually, I suppose, really being attractive on our own.
Varushka, your initial thoughts?
Sure. So, I agree with most of what Annabel has said, and she's laid the landscape out quite well. Between the main budget in Feb and when we got downgraded, our bonds weakened quite significantly by over 200 bips across the curve. But since the downgrade, and thanks to the SARB having cut rates as well as intervened with the bond purchases within the secondary market, we have seen our bonds strengthen since the beginning of April. So to clarify that point, at the start of April, just after Moody's had downgraded us to sub-investment grade, we see that the SAGB curve bull steepened. So our shorter dated bonds had fallen at a much faster pace as the longer dated bonds. And this was, again, with SARB's intervention. Also, what had occurred was National Treasury had endeavored at the end of March to issue on the shorter end of the curve. And as a result of the aggressive cutting, we actually saw reductions in the cost of funding. Now, as we know, we had the overlay of the pandemic, and it almost felt like we were living in a different world month to month over this past year. But in March, April, and May, they were difficult months for SAGBs. The foreign holdings of our SAGBs had been reduced quite significantly, to Annabel's point, and we were struggling with those illiquidity issues, which the SARB had to then intervene with those intraday repos, which worked because in July we did see and August we did see an increase in foreign holdings with the SAGBs. Again, with the lead up to the MTBPS, there is again caution and a little quieter activity around SAGBs leading up to this important event.
Yeah. Annabel, I want you to send your people in the background to go and calculate how much this has cost South Africa. I want to put it in rand terms. I'm a journalist. When you write in a newspaper and you say, South Africa, I lost 500 billion rand as a result of COVID-19, it concentrates the amount of damage in people's minds. But you do the calculation in the background. Varushka, one little follow-up question on that. Can I change the question?
Godfrey, you're not asking me to do it now, are you?
I'm
Because I'm
asking you.
actually at home, and the people in the background are my children.
There we go, there we go. I thought you were in the office like all of us. So maybe a question for another day. But Varushka, I wanted to know, if I were to change the question slightly and ask, if we were to take out the risk and the reduction in perception for South Africa that came with the rating downgrade to junk by all the three, would you argue that we could be seeing a rand at a much better level than where it is, and also could we be seeing the benchmark yields at a much better price than we are seeing at the moment?
So this is excluding us being downgraded. If we
exactly, I'm trying to strip out the cost of the downgrade.
You know, it's an interesting question. Everything always makes sense in retrospect, so it would be a very interesting question to look at that scenario. However, before we had gotten to the actual downgrade, there was a sell-off in the SAGBs. We saw a decrease in foreign holdings by 56 billion in March. So that means over March, even before the actual downgrade was announced, investors were already starting to position themselves, given the outlook of growth in the environment. And I'm sure Annabel will be able to elaborate on this. But we were already in a very dire growth situation, as well as fiscal woe within South Africa before the downgrade even happened. So as much as we did see a shock to the rand on the back of the downgrade, we were already downgraded to sub-investment grade by S&P and Fitch in 2017. So it's almost as though it was inevitable.
Right. Annabel, so that's the rand, those are the bonds. I don't know to what extent you have been able to calculate for me whether we have also seen our equities being down-rated by international investors who are a big player, of course, on our markets. I think they are responsible for about 40% or so, if I'm not mistaken, of the JSE top 40 in terms of the shareholdings. Have we seen a similar impact on that front?
Well, you know, Godfrey, how it essentially works is that no company, no corporate that's domiciled in a country can actually have a higher rating than the sovereign. So, you know, if you're a South African company and you talked about that 40%, you cannot have your credit rating higher than what South Africa has. So if South Africa's been downgraded from investment to sub-investment grade, so too will you by that credit rating agency. If you've dropped from triple B minus, for example, sadly, such a low rating investment grade, you may have a very good company, and of course then to double B plus as a sovereign, that was what will happen to the corporates as well. And of course, that has huge ramifications because South Africa is still moving down the credit rating ladder. This is a key point for us. We have not reached the bottom. It is not, oh well, we've hit sub-investment grade, or as people euphemistically call it, junk, and therefore everything's fine and we'll just smooth sailing from here. We are at the moment continuing to fall. In the credit rating country reviews that we are going to have in November by Moody's and Standard & Poor's on the 20th, and Fitch around then as well, they don't give a precise date, we will find ourselves at risk of further credit rating downgrades. Already the President's advisory panel has said that they are looking to perhaps see the peaking of debt maybe closer to 100% instead of 87%. Now that in itself is just a huge credit rating downgrade waiting for South Africa to happen. And yet we haven't even had the special budget review impact come through on the credit ratings themselves as well. So we believe we will see Moody's downgrade us further, and of course the other agencies as well. Now that is quite interesting when it comes to S&P, because they've got us on the last rung of double B. So are we now going to fall into the single B categories? And if so, and Godfrey, this is really a big worry, the C grade categories are next, and after that comes D for default. So what's happened in South Africa because of this is we have seen our credit risk rise. And what that really means is that is your risk of default. A rising credit risk in a country is off-putting to foreign investors, and that's why we've seen foreign investors sell off so much from South Africa, not just since the special budget review and since COVID, but before COVID, as Varushka says, because of the fact that we had a bad budget at the start of the year as well. In fact, we continue to disappoint as we go through all our budgets and special budgets and medium-term budgets, because we continue to show substantial fiscal slippage. Now, we are incredibly worried by the president saying that he may, well, not the president himself, but his advisory panel saying that
Yeah.
maybe 100% is better to peak at. Clearly,
Yeah.
he could be getting very bad advice. It is not going to be less harmful to the economy. It'll be more harmful to the economy
Yeah.
because you're going to be having substantially higher borrowing costs. You're going to have a quicker deterioration through the credit ratings,
Yeah.
and you're going to come quicker to default. Plus, you're going to have much higher expenditure on interest, on borrowing costs, on these yields that go up so very substantially. They're going to eat into the budget. They're going to reduce the amount of money for growth enhancing reforms. We're
Yeah.
already facing massive problems with the unions, even trying not to give them increases there. And, the huge problem we face is that the higher borrowing costs go, the less you have to stimulate economic growth and even just to pay civil servants' wages themselves and social welfare. So I would argue it's going to be much more harmful to the economy by peaking at 100% instead of 87%, not less.
I'm hoping that we could get a clip of this and send it to the presidency and also send it to the unions, and hopefully somebody's ears are going to burn and say, hello, we are facing a crisis here. Varushka, I wanted to ask if that's a scenario that you share, because that question I was actually going to ask it next. So Annabel has in part answered it, because my question was around how long are we going to be at junk? And from what Annabel is suggesting, that is actually, because we haven't seen the bottom, we could be very far off. I was trying to see if we could put some years on it.
Just in terms of the president, I'm sure he's already watching, Godfrey. With regards to the credit risk, I mean, Annabel hits the nail on the head. One of our saving graces for Moody's was the fact that we benefited from a very strong institution. So local institutional strength saved us in previous years. Our financial institutions can be seen as a base or backstop for debt. I mean, if we have to look at our local auctions on a weekly basis, there has never been a failed auction, given that primary dealers are obligated to take that up. So in terms of the rollover risk is minimal, but definitely there is a sovereign debt crisis that is looming, and it is to the point that Annabel has shared.
How far is it?
So could you repeat that, Godfrey?
I want to know how far out that crisis is. Are we talking 2, 3 years, 4 years down the line here?
Well, I think given that we had started on the back foot with regards to before COVID, and COVID really did leave a dent in our fiscal issues even further than expected. So, I mean, we aren't too far away. I mean, 2 to 3 years seems optimistic. I would say closer to the 2-year mark. We're getting very, very close to this crisis, the sovereign debt crisis.
Annabel?
What I can tell you, Godfrey, is that, it's quite interesting that a lot of bond investors are not that interested in 10-year bonds in South Africa. They're not that keen to buy and hold them anymore. And actually, the 5-year bonds are the ones that they are looking at instead. In other words, they're worried about being repaid their money. And this is something which appears to have fallen completely on deaf ears from government. This huge credit risk, and we're not saying it's fallen on deaf ears from Tito Mboweni. He's done absolutely everything in his budget to show in great detail what the huge problems and issue is. It seems to be an intellectual misunderstanding from the President's Economic Advisory Committee that they don't understand these points that, Varushka and I are discussing. What are they going to do if, all the foreigners disinvest and then suddenly we now bring in prescribed assets or some of the other grand plans that we are seeing from this advisory committee, which is also competing for savings in South Africa? And what we really mean here is that there's a limited pool of savings. The pension funds, the asset managers, even the insurance funds, all of these big funds are very heavily invested in South African government bonds. Where are the additional savings going to come from? Yes, we're talking about the carry trade arbitrage, where you are obviously borrowing at the low end of the yield curve, and then obviously reaping the benefit from the high end of the yield curve. But that is not going to persist forever. So what we're really saying is we're actually walking on very thin ice. Ice is going to crack and we're going to fall in. We cannot have this misunderstanding that continues to circulate that it doesn't matter how much debt you borrow, that there's always money to borrow, and it's going to be absolutely fine. We had a very slow burn through government finances over the past decade that's become substantially worse as accelerated, and this acceleration is going to continue. Perhaps there's some confusion why the debt projections are accelerating so quickly now when they didn't do so in the past 10 years, but that is what happens. You start to run out of money. It's like using a credit card to pay off your other credit cards' debts. It just doesn't work. You still have to pay the debt payments, and of course you have these big expenditure costs, and of course our government doesn't want to go to the IMF to obviously go under administration and have our finances sorted out. So instead, we continue to merely borrow for current expenditure. The past 10 years of massive ramp up in debt under Praveen Gordon has been a complete waste of money because it hasn't had long term benefits resulting in sustained high, robust economic growth. And instead, it's
Yeah.
been eaten up by current expenditure, eaten up by corruption, eaten up by civil servants' massive salary and wage increases, and we have very little to nothing to show for it. And the huge problems that we face going forwards, the penny's not dropped. As you've said, the unions continue to agitate for higher wages, and perhaps the only solution is that government wins the court case with force majeure and the national disaster not to give them those increases this year, when everyone else in the private sector is actually getting less remuneration than
Yeah.
last year, not more.
Yeah. And absolutely other people are out of work. 2.2 million we're told between the first quarter and the second quarter. And I've been covering the Zambian budget for years, and these issues kept being raised over time. And what did we see? We had the politicians that didn't do anything. And where are we with Zambia? We can't pay interest. And that D word again is coming into the conversation. I'm not saying South Africa is like Zambia, but slowly, like an elephant, we're creeping towards there. Ladies, thank you for joining me this afternoon and for opening up my eyes. I thought we were not in a debt crisis. I thought it was far away. I thought it was a question of how many years are we going to be in junk. It doesn't look like it'll be any time soon that will be out of it. Annabel Bishop, Chief Economist at Investec, thank you. Varushka Singh, Fixed Income and Currency Strategist at RMB.